Students and working accountants, welcome to my Expert Tally Train YouTube channel. My name is Babu Rao from Hyderabad. So for the last many days, I was out of station and that's why I was not able to make videos. So from now onwards, so I will make regular videos, okay? And today in this video, we are going to discuss the topic of interest calculation. So, what is meant by interest and what how it is calculated in tally time that we will discuss. So, we'll discuss about the interest now. Yeah, actually, what is meant by interest? Generally, in the business, the person who has to money is called the debtor, and the person has to receive the money is called the creditor. So, the debtor, when he is paying the money to the creditor, for the duration of the amount, that is for the duration when the amount is paid, sometime. So for the duration, depending on the duration, you will pay some extra amount for the extra amount, and you add the extra amount to the amount, and you will pay the total amount. The amount of the original amount is called the principal, and the amount added to it means the extra amount paid is called interest. So that interest will be paid for the period for which the amount is not paid. So it's called the payment is delayed. So the interest is calculated. How it is calculated in the tally. Actually, the interest is the two types. One is simple interest and the other one is compound interest. And the original amount is called the principal. So in the case of simple interest, the interest is calculated at a certain percentage for any time period at the same rate and on the same amount is calculated. That is, on the principal amount only, the interest is calculated for any period. This is called simple interest. Compound interest means, depending on the time of compound, the interest is added to the principal and the total amount, the interest is calculated in the next period. So the next period again the interest is added to the principal amount and on the total amount the interest is calculated. This is called compound interest. That is calculating interest on interest. It is principal plus interest will become the principal and then interest is calculated. Again the interest is added and the total will become the principal and the interest is calculated again. This is called as interest on compound interest. How the interest is calculated? That is that actually the terms, the interest will be calculated about square rate. So that rate may be for monthly purpose, monthly rate or yearly rate. So monthly rate if you take into 12 months, it will be yearly rate. And also, for example, for monthly, if it is 2%, yearly 2 into 12 is equal to 24% will be the interest. How the interest is calculated generally is the principal amount, the original amount, principal amount into rate into time, that is the duration of the period or time or duration divided by 100. Actually, rate by 100 means rate divided by 100 means it will divide at the end of the principal into rate into time into 100. The example, in the case of monthly or yearly, monthly means 2% per month means yearly it is 12%. If it is 12% yearly divided by 12, it will be monthly interest. And how this interest is calculated is, for example, if the principal is 10,000, okay, rate of interest is 2%, and the duration of the period of tenure is also called. Tenure is 3 months, then the interest is calculated 10,000 into 2 CVM. 10,000, we calculate 10,000 is the principal into 2 into period 3 months divided by 100. It will be 600 rupees. It will be 600 rupees per month. We take into that is not for month. It is for 3 months. Divided by 3, we take it to be 200. So you can calculate directly 10,000 into 2%. It will be per month 200 into 3 months. It will be 600. Directly we calculate 10,000 into 2 into 3 divided by 100. It will be 600 rupees. That is the interest. So how the interest is calculated in the tally we have here. So here the interest is paid on two types of amounts. One is loan. So if one person gives loan to another person, that is, we do loan to another person, or we take loan from other persons, means a private person or banks also. We will not give loan to the bank. So we take loan from the bank. So in the case of loans, the loanee, that is the person taking the loan, will pay the interest. Along with the interest, you will pay the total amount to the creditor, that is the person who gave the loan. That is one, interest on loan. And interest on sales and purchases means, if between, in the case of sales and purchase means interest on sundry debtors or creditors in the case of business. So the supplier, seller will be selling goods to the debtor. So the debtor will take the goods and he will use the goods. So on the total amount of the goods, he will take interest. That is, the debtor will pay interest to the creditor for the purchase and sale of goods. These are two sides. That is, one is loan and one is purchase and sale of goods. That is sundry debtors. So we will now learn how the interest is calculated in tally frame. So actually, in the tally frame, when you open the tally frame, so first of all, you take interest calculation. See here, I created the company interest calculation. So you can see how to create. You go to create button and you can create here. I already created here. Go to alter and see that. This is the interest creation button. That is the alteration button. So you give all the details and accept. So this is created. In the case of a new company of creation, you go to the features, company features you have created. But it's already created the company. Since I already created, we have to go to the features by pressing F11. This is also called F11 company features. See that actually when the company is created, it will show less number of options. That is accounting features. There are two inventory features and we want more options. So click here. Some more options, some more features. Click yes. So it will show more. Actually, here it will show this much only. And again, there is another option. Show all features. You click that yes, then all the features will be here. These features are fixed. In this case, show maintain accounts, it is compulsory because we are using the tally for accounting only. And then bill wise entry, inventory there are two, and GST, all these will be yes by default. This also will be yes by default. This is never required, make it no. And in this case, for the time being now, first of all, we will calculate interest on loan. So in this case, in the case of interest on loan, so we have to enable the interest feature. First of all, we have to enable interest feature. We have to enable. We have to enable the interest feature. We have to enable the interest feature. That is the first thing we have to do. The interest feature is to be enabled. Okay. So here, go to F11, and here you see the accounting features. The third one, fourth one is enable interest calculation. Yes, and all others, these are also required later, but now they are not required. Make it yes, make it all this no. Only this will be. In the case of loans, this is the only thing required. In the case of goods and purchases, we require inventory and all these things. So now only we have enabled interest calculation. We enabled interest calculation. So calculating interest we have enabled in 11 features. F11 features enabled this one. And then now we will take up example here how the interest is calculated. So interest calculation is to be, the feature is to be enabled. Then we will go to the transactions. go to create page, create ledger, or go to alter page, select ledger, then see the two ledgers will be available by default. See the list of the ledgers available. Want a new one? Go to create button. So directly from create ledger, go to create button, or from alter button, select ledger, you see the list, then go to the create button. And after this, yeah, you will create a ledger account. For example, we are giving loan to a person. For example, we are giving loan to Ajay. So that will write Ajay account needs to be created. But here, in the case of debtors and creditors, through the goods by selling sales and purchases, they are called as sundry debtors or sundry creditors. So we will create his name, only name for a J account. We will create and then we will come to the blue. It will be sundry debtor or sundry creditor. But here we are giving loan. It is not. He is also a debtor, but he is not a sundry debtor because he is not a debtor through the good. That is why it is called as loan, loan to Ajay. Loan to Ajay, and in this case, group will be is a debtor, not through the goods. That is not called as sundry debtor. It is called as loans, loans and advances. So we are giving loan. If you are taking loan from others, it will be called as loan liability from banks and other financial institutions that provide security. Then it is called as secured or unsecured loans. In the case of other parties, private parties and friends and relations, we are taking loan. It is called loans liability. Now we are giving loans and advances we are giving. Okay, that we have to create and see the F11 feature. Since we enable the interest calculation, here we show the option activate interest on this ledger only on the personal accounts only. The persons will be liable to pay. A person will have to pay. Another person has to pay. This is one credit or debtor. That is only for any for the personal account. The interest is calculated. It is activated. So for their transactions. So here we have to make it yes, and then we have to. So here we are giving the option. So activating the interest calculation. Then after giving yes, you will have to go to a page called as parameters. That is how to calculate the interest. That is the settings are called as settings or configuration of the interest calculation. How the calculation interest is to be calculated. Here, the simplest parameter. There are also called the settings or configurations called parameters. So if you click that, yes, so we have to see interest parameters. That is interest calculation settings or configuration or settings. They are called as configuration settings or parameters. For loans, just we can use only simple parameters. So this is called as this small window. This is called simple parameters. Simple parameters. So in the simple parameters, how to calculate? See here, include interest rate date, transaction date for interest calculation. For calculation of the interest, the date of the transaction is to be included. How? So whether the date of the transaction is to be included or not. That means there are two dates. One is the date when you are giving the loan, and another one is at the end when he is repaying the loan. That here for amounts added to include or not. For amounts added means amounts added to the debt, that is loan. That is the time that and the loan is given. It is called the beginning date. In the beginning date, if you give it S means you have to add means you are giving the loan on 1st April. So the date is added to the calculation. That is added means interest will be calculated from 1st onwards. Okay. And the next one is for amounts deducted at the end, amount is repaid that will be deducted from the party, from the loan, isn't it? That is why, in that case, whether that is to be added or not, that is, when you add the first day beginning, you add at the end, this is for deduction of the date. The date is to be deducted means omitted. So if you make it no, if you make it in the beginning, if you make it yes, so the first transaction date, the beginning transaction is added. That is from 1st April means 1st April is added. You add the 1st April beginning. You add here then the date will be deducted. So at the end, is it to be deducted? Yes, means it means It means, so in the beginning, the date is added, in the ending, the date is deducted, means the date is to be deducted, means the date is omitted. So from 1st April, it is added. So suppose on 1st July is repaying the money, so it is to be deleted, it is to be deducted, means interest is calculated from 1st April to the previous date, 30th June. So here, if you give yes, first yes is for adding the beginning date, transaction date. The second one is for omitting. This is for adding. This is for deleting or omitting. That is deducting. So yes means first date will be added and the last date, that will be end date will be deducted if it is given yes. And if you do no, if you do know, don't add the first date. From 1st April is the transaction date. Don't add it. Means from second it is added. It is connected with the regard. From first, that's from second will be the first day. That one day will be up to second. That is why no means don't add the first transaction date. If it is not added, at the end don't direct. If it is added means at the end deducted. If it is not added means at the end not deducted. So here also it will be at the end, the last date will be not deducted. Suppose on 1st July, it is loan is given on 1st April, that is to be calculated from 2nd July, 2nd April, and at the end, 1st July, he paid the money. That is not included, that is not deleted, it is added. It is not added in the beginning, added at the end. If you give no, if you give yes, added in the beginning, so no means not added in the beginning, added, not deducted at the end also. If you know, not added, if you are giving no, not added, not deducted end. If you yes, added in the beginning, deducted at the end. Generally you will take no, and now here, come to the rate. Rate means maybe a yearly rate or monthly rate. For example, you give 2%, 2% they are giving, 2% means generally it will be monthly rate. It is monthly or yearly, whatever the rate may be. Monthly it is 12% or 15%, maybe monthly. In this case, whatever it may be, we'll do the rate here and how the rate is calculated. Per month it is calculated or per year it is calculated. See here, per month means 30 days month means 30-day month means whatever the number of days in a month, calculation will be taken as 30 days per month. So, for example, 31 days are there, it will take only 30 days. The one day it will be added to the next period. In the case of 28 days, it will take 30 days means 2 days from the next month it will take. So it will be added. So in the next month, 2 days will be reduced. Like that, it will take 30 days, 30-day month. Similarly, 365-day year means in the year, whatever number 365 or 366, it will take only 365 days as the year. That means if it is 366 days, one day will be added in the next year. Calendar month means it will take exactly what are the number of days in the month it will take. So 31 days or 30 days or 28 days, whatever it may be, it will take as 1 month, calendar month. Or calendar year means whatever 365 days or 360 days, whatever it may be. 365 days it will take as a year, 360 days also it will take as a year. So it will not add or reduce the other day, other years. That is why. So we take up 2% means calendar month. And here all balances means whether the transaction is having done, the person on which we are calculating the interest, Ajay. We have to take only debit balance. When you are giving loan to be debit balance, you can take all debit balances only. When you are taking loan, we have to pay, you will be a credit card. In such a case, take the credit balances only. All balance means taking loan, taking money, giving money, taking money, giving money. Like that, if the transactions, we can take all balances. But whether it is debit balance or credit balance, there is no wrong, nothing wrong in selecting all balances. Means whatever the balance is, all the only debit balance, you take only debit balance only. All balances is also debit balance only. If it is credit balance, you take only credit balance. So you can take all balance also. So there will be no difference. So I'm taking giving loan, I'm taking debit balance only. Example taking. So this interest calculation is activated, and then do other details of the party and accept the. So loan, the person's loan is created. So the loan account is created, loan to achieve. Okay. Now on 1st April, we will the transaction. So in this case, 1st April, 1st April, we are giving loan. So when you enter, we are giving loan to the person. So payment voucher, we'll go to payment voucher. So debit, who is the person receiving? Loan to Ajay. Ajay is the person receiving. So his account is taken as loan to Ajay. For example, 10,000. Then credit. What are they giving? They are giving cash as loan. Giving cash. Cash. So here, come down. Here, because there is no balance here, he's showing negative balance. That's why it's showing red color. And then loan given. Being, you can make cash. Being loan given to Ajay. It's not required. Loan given to Ajay. So okay, we have given the loan. So here, when you calculate the interest, this is a simple interest only. When we want to pay back the money, then we have to calculate the interest for the whole period. When we want to pay up to that period, for the whole period, we calculate the interest and we add the interest to the account, total amount will be received. Okay. Now we have to see the calculation of interest. So here, this can be done in 2 ways. One is here, go to the gateway of tally, go to display more reports, then go to statement of accounts, only accounting invoice, accounting vouchers. So accounting features we enable. So statement of accounts, if you say here, statement of accounts, if you showing interest calculation, because we enable that, that's what it's showing. If you don't enable this interest calculation, it will not show. Okay, this calculating, showing interest calculation. Click here. How, where, what about interest calculation means? We have to, if you do loan to others, we will receive the interest. That's why it is called as interest receivable. If we take the loan, we have to pay the interest payable, and this interest receivable and interest payable, if you click, it will display all the persons from whom we have to receive the interest, to show all the names and all the calculations. All the persons with calculations it will show. And if we take click interest payable, all the persons to whom we have to pay money, and we have activated the interest calculation, the list it will show with all the calculations. So this is the total, all the data. And if you go to ledger, it will show the ledgers, all the ledgers. If you show ledgers, if you want whatever you want, which party you want, only that party you can select. If you click, so it is showing only one ledger because we create only one. There is one more to show all the persons, only the ledgers whom where we activated the interest calculation. There are 10 persons, only 3 persons we calculated. Only those 2, that is number of persons whom we activated in the accounts in which we activated interest calculation. Only this dot will be displayed. We go to group to show all the groups. Here we take up loans and advances. Current assets means debtors will be there, and loans and advances, personal accounts will be there. Interest calculation, that's what you show it. We click that, all the persons in that group will be shown. But we will take up now. Ledger will take up. Now only one ledger. So you can take either only one person, or here go to ledger, Ajay, act that, and click that. So now this is the active, loan interest calculation page. Ledger interest calculation. Ledger interest calculation. So we have to give the date here. F2 if you click 14 date 2. So when is repaying? On 1st July. For example, on 1st July is taking. So here and so amount is balance 10,000. From first, we have given in the settings, we have given in the settings there. Where have we give? We have given no. So don't add the first transaction. So first we have given loan. So it is not adding the first day. That is the date of the transaction is adding. Give no. That is why it is calculating from second. And the date of the last date is the ending date will be 1st July. Don't add in the beginning. Don't deduct in the beginning. First one is for adding the beginning, first one. Second one is for deducting the last date. These two. So add the first one, deduct the first one. Don't add the first date, first transaction date. Don't deduct the last transaction date. So here, first date is not transaction, not deducted, not added. So the ending date also not deducted. So April to think. First date is not added, so calculating from second. Last date not deducted, so acting. If you do yes, this April 1st will be, that also will be included. So it will start calculating interest from 1st April, and here the last one will be deducted. 1st April added, last April deducted, last date. So here it will be deducted means interest will be calculated up to 30th June only. That means that is also 91 days to be 91 days. Now interest will be 600 only. Okay, but in that case, what you have to do is, it will actually, if you take, even if it is added, this is not, it will not be deducted. First is up to July, first July, you calculate interest for 90 days. And actually, the last date is, what the amount is deducted, the amount is paid, that is that date it will be deducted. So if you make it yes, is added to deduct this, in order to deduct this one, what we have to do is, we have to show the receipt of the money. When the money is paid only, the amount is deducted. That is why we have to show the receipt entry. We have to, just like receiving the money. After receiving the, then we have to calculate interest. So that will be correctly calculated 600 rupees. And again, that amount, receipt amount, that is to be treated. And again, along with interest, we have to see this is not good one. We make in this way. This is good one. So now this interest is calculated. So here this is ledger interest calculation. This button is only for calculating interest. See here, this is interest calculations only. So ledger, if you go, select here, take the date, 1st April or July. So here. So this is only for ledger interest calculation. It will not give any effect in the ledgers. It will not go to the ledger. This will be here. What we have to take this amount to the ledger of this person. So Ajay take the ledger, the interest, we have to transfer the interest. To transfer the interest, this will not be shown here. It will disappear because it will happen. Till it is transferred, it will show up here. Suppose this is up to 1st July we can. Suppose it is repaying on 1st August, take 1/4 to 1/8 up to 1st August. See, 2nd April, so first date is debited. 2nd April to 1st August, it is showing 800 rupees. Per month it is 200. April, May, June, July. 4 months, it is 800 rupees. 1st April to 1st July. April, May, June, June 30. That is 3 months. It is showing 600 rupees. The days may be 91. Full month means to take in whatever the number of days to take as 1 month. April, May, June. April 30 days, June 30 days, May 131 days. Like it to take the number of days it will show, but it will take as 1 month. But every month, any number of days it will take 1 month. So now we have to transfer this. But generally, this can be transferred in 2 ways. One is to the journal we can transfer to that, because he is a debtor, his account is showing debit balance, interest is receivable from him. That means he will become a debtor for the interest also. That is why for interest receivable from others, for debtors, it is called as interest receivable, and we have to issue a true debit note. The account is to be debited again. Already one of 10,000 is debited. Now interest also is to be debited. Total amount will be received. So it is called debit note. So we can transfer the interest to the debit note or through voucher. That is, which voucher we have to do then? Transfer entries, these adjustment entries, we have to use only journal F7. So here we have to go to. So here, instead of closing this, going and doing this, you keep it open here. From here itself, you can do all the work. So with the help of this button, with the help of go to, click go to, and here. Now, what you have to do? We have to create a voucher. So here is it. Create voucher. Create voucher. If you click create voucher, which voucher you have to use? We have to use journal. We have to use, and what is the date? 1st July. So change the date to 1st July. 1st July. So 1st July to journal, we are making the entry, and here. So what is this? Ajay has to pay interest to us. So take Ajay, loan to Ajay, and here in the case of journal, when I'm doing the bench for entry through journal voucher, we have to do the interest. We have to do the interest manually. So here, this is for loans only. Debtors is different. So here, so loans only 600 rupees. We have to do the interest amount. We have to give manually and then take it. What is this amount? Interest. So we have to receive this interest income. So we have to create interest receivable. We can make an interest received also. We can make it as interest receivable also. And what is the group for it? Interest we are receiving is indirect income. Don't take this income, indirect brackets, expenses indirect. Don't take it. Indirect expenses, indirect in these things. You have to select. So indirect incomes. For this interest receivable, there is no calculation. So just accept and accept the interest receivable. So what you have to do? In interest receivable. Being interest, you can make this interest received also. So interest received also you can make it interest received and indirect income that also we can do because we are receiving interest. Since we are not received still, that's why we received actually. So this is one. Okay. So this entry is made. Then again now you click yes, escape, escape, you will come to the again the loan interest calculation page. We that we do that, you can do from there itself. Again go to again you click so use go to button. Now you have to see the balance because this is to it will be added to the data. So go to ledger vouchers. Ledger vouchers you click. So all the ledgers you will show. So you have to see loan to see actually you see income. If you see interest is income, it shows a credit balance because it is income. Okay. If you see the loan to Ajay, it show 600 rupees, this is one. And the totally if you take total count from fixed capital. So 10,000 rupees the amount. Now interest receivable 600. Total amount receivable is 10,600. Now we can receive the money now. Unfortunately, is paying. Now we have to receive the money. So we have to enter the what we have to do? Create voucher. We have to make voucher entry only. Create voucher. What is the entry and Unfortunately, we have to receiving the money. Take the receipt. Can come here. Loan to Ajay. That is the amount C, 10,600. So 10,600 is the total amount. To cash we receive. So to cash we receive. So B loan amount received with interest. Loan amount received with interest. So now if you go to the again, if you go to the go to button, then go to ledger vouchers, go there, see the loan to HP. So 10,000 plus 600 interest. Now 10,600 is missing. So there is no closing balance. There is no closing balance. This is the best method for the loan. So for the loans, we have to calculate through the we have to send the transfer the money through the journal voucher, or we can make it in the CP. I am deleting this interest and payment also. I am deleting. So now we can do the same thing. We can do the same thing. Come back. See, we are in the interest page. Okay. Now here, this can be transferred to the party. This can be transferred to the party through debit note also. Through debit note also. So in this case, debit note. So you have to see here, come here. So create debit note, create voucher, create voucher, create voucher. You come. What is the entry? Debit note means go to other vouchers, go to Alt F5, it will be debit note. So in the case of debit note, first of all, it is a journal. For journal, it is the mode of the transaction will be recording will be single entry or double entry in the case of accounting voucher. For all the accounting vouchers, either double entry or single entry. For journal, only double entry is available. That is debit credit is available. That is why we cannot change the mode. Only double entry. We cannot change it to single entry. But in the case of debit mode, we can change the mode either double entry or single entry. That's called as debit entry. I mean, for debit note, credit note, it will be accounting invoice, item invoice like that. Okay. Now go to Control H, change mode, accounting invoice as voucher invoice because accounting invoice, and we enabled or we have activated only accounting features. GST features we are not activated, as well as goods, that is called inventory feature. And if there is inventory, then another one item invoice mode will be there. This is as original. But now here we are taking this one. We are using this one. We are using it for interest calculate, for interest accounting. So select this one, select that one. It is also lost for interest calculation. It is used for interest accounting, yes. But is the interest to be taken as compound interest or simple? We request simple only. So is it to be treated as compound? No. So like this, if you get, now if you do through the debit note, the interest amount which is already calculated, it will come to this voucher automatically. See here, debit loan to Ajay. See, you come here, accept, see 600 rupees. It's taking automatically. So it is taking automatically means that debited Ajay account is debited already with this entry. So 10,000 is the balance, and here the same thing, interest receivable and interest receivable with interest. Interest is receivable. Interest receivable. Interest receivable 600. We can do this. And here when you are making the changes, here when you are making the changes, it asks you that it is to be, so here you click this one, we selected use for interest calculating, interest accounting, and is it to be treated as compounding, we are giving no. So this can be done in the case of what you say, the ledgers. I mean, in the case of goods and services, sales or sale of goods or services, that's called the data segregation. Also, we can do in another way. This is during the entry, we are selecting this one voucher and then making the this one mode we are changing. Okay, this is change of mode, and if with that one and the other compound or not, it is asking. So we can do in another way also. The beginning is before this, we can create a class in the debit note, that is interest receivable or simple interest or interest received, interest paid. Like that, we can create a class also. So that will create that creating class we will take in the data segregation. So here this is over and this is over, and the 600 rupees automatically it is taking 600 rupees, the amount is calculated. So interest receivable transferred. So being interest receivable, being interest receivable. So we'll do that. Okay. Now you see the interest is calculated. Now go back. Escape, escape, escape. The interest is not showing there. First April to 1st July. Period is the same, but there is no interest because this interest is transferred to the ledger, transfer to ledger. So this is not showing. Now from here itself, now you will get the money. Again, create voucher. What is the entry we have to make now? Receipt money, receipt. So we take the receipt on the same date, and here come loan to Ajay. See, 10,600 showing. So 10,600 rupees to cash, 10,600 rupees. In amount received, in loan amount received with interest. So this is coming. Now come back, come out completely, and now you see, come to the ledger, DAL ledger, take account, see here, the same thing. You can go from here also, ledger vouchers, so select loan, so again, you will see this ledger, the same you can see here also, to directly coming from ledger. So this is balance, no balance is shown. This is how we will calculate and this is the money from the loan given, from the loanee, that is the person to whom we give the loan. Go to the day book, you go to the day book, you can see, say first of all, 10,000 rupees is 10,000 rupees is given as loan. Then it has, in this case, it's able that interest will not be in the sequence. It's okay. If they show in the voucher type wise, they will voucher type sequence. So debit note 600 rupees. Then total amount we received 10,600. So first is the entry, this is the entry. Second entry is this one. That is the third entry. So it's not showing entry wise in the sequence. But if you want to see in the same sequence, go to F12. This is only default method. You go to this one. in sequence of entry, you calculate this and accept C. 10,000 is the first entry, is the second entry, is the third entry. So entry wise it is showing. But by default wise means only date wise it will show, but in every day the amounts will be shown in the order of the vouchers because there are two receipt vouchers. So two receipt vouchers, 1, 2, for example, to go one by one. So two may be after something. Two voucher number two, receipt two, maybe after 2, 3 entries in the same day. But receipt number one, receipt two, all the receipts on that day will be shown in the sequence. But if you select this one, if you go out, now if you go and see, the F12 again sorting availability will be default always. In any other way, if you want to display the report, see you can select anyone. It will display in that way only for that once only. And after if you come out again, if you go to F12, to show default only. So always to show default view. If you want any other view, so we have to go to this one here. We have to go to this sorting method. We have to select any method and select any method. Suppose amount decreasing. To take amount increasing. Okay. See, first is a small amount. See, first small amount increasing, still increasing. 600, 10,000, 10,000. Amount is going on increasing. If you take here amount decreasing, if you take, see, for the highest amount 10,600, decrease 6,000, decrease 600. That's by default. If you go to there, it will show by default. It will show by default this one. Voucher wise, this is payment voucher, this is receipt voucher, this is debit note voucher. On the same date, if there is another debit note, this is one. Here only it will show the debit. And there is one more payment on the same day. After that, number 3, then number 4 will be there. So now if you, this is the 3, fourth entry is payment, it will not show at the end. It will show next to this only. So date wise and voucher type wise, the display will be made. Okay. If you want any other way, you have to go to this sorting method, which is default. So you have to select anyone. In that way, you can sequence of this first entry, second entry, third entry. Like this, you have to make. This is about the calculation of interest with simple parameters, means simple configuration or simple settings in the case of loans. And then in the next video, we will take up the simple setting, simple interest, calculating on 10,000 only. Anytime you can take any number of times, any number of periods, April to July. July to amount is not paid. April to July, again July to October, like that. Many number of periods you select, it will be calculated on the principal only. This is simple interest with simple parameters, means configuration, and you are calculating for the loan. Tomorrow, simple interest with simple parameters for debtors and creditors, sale and purchase of goods. That is, the sell will be data, how it is calculated. It will be the parameters will be a little bit different for debtors and creditors. That we will take up tomorrow. So, with this in the next video. So, with this I am closing this one. Please, one request to you, please watch video in the end. And if the video is good, please like the video. So others, government, YouTube people will share this video to many people so that they will get this video to them. So they can learn this topic. And also, everyone, please visiting my channel, please subscribe to my channel and click bell icon at the end of the next to the subscribe button and select all. You get notified for all the videos which I upload, and also share the channel with all others also. With this I am closing. Wish you all the best. Bye.